Asian equities mostly rose on Monday on optimism that countries will reach trade deals with the US before an August 1st deadline, while the Japanese yen recovered ground after the ruling coalition lost its majority. Singapore's benchmark Strait Times Index extended gains for an 11th consecutive session to another all-time high, while Hong Kong's Seng topped 25,000 points for the first time in 3 years, as tech giants advanced following strong earnings from Taiwanese chip giant TSMC and news US titan Nvidia would be allowed to export key semiconductors to China. Chinese blue chips also advanced, led by rare earth and construction sectors, as Beijing kept interest rates unchanged. We're joined now by Han Tan in Dubai. He's chief market analyst at Nemo.money. Thanks for being with us, Han. Now, Singapore shares have been on a record rally recently. What's behind this jump?
Yeah. I think overall, you've got Singaporean assets that are seen as the safe haven in that part of the world, right? So and then that translates over into not just the Singapore dollar, but to their equities as well. On top of that, you've got finance-heavy names, these blue chips that are obviously benefiting from this not just safe haven bid, but this higher for longer era for interest rates, especially in the US. But also there is this component of more money going into fewer quality names, right? And that's why you've got the Singapore government that is trying to boost participation in those names and hopefully give more options for investors around the world.
Right. Meanwhile, markets had priced in Prime Minister Ishiba's loss in the upper house. How could this political pressure weigh on Japan's current troubles, especially as it faces that August 1st deadline to reach a trade deal with the United States?
Indeed. So it certainly adds a layer of uncertainty to the discussions with the U.S. administration, right? How much can they cede, especially when it comes to some of the politically sensitive areas like automakers, for example, or food, right? I think from the market's perspective, we'll be looking at how this government actually goes about with its fiscal plans, right? The idea that if there is pressure to become more populist, i.e. loosen their purse strings, that could actually weigh on the government's fiscal standing, and that could be another layer of uncertainty for bonds, and that translates into a weaker yen as well. And we had seen those bouts of concerns actually flare up in the Japanese bonds and currency markets in recent weeks. It's something to keep monitoring in the weeks ahead as well.
And we also have some major tech earnings due in the US this week. What are markets pricing in?
Yeah, obviously there is this cautious optimism with U.S. stock indices around record highs. U.S. futures are now in the green as we speak. That AI theme is still very much front and center. We have heard some positive notes come out of Taiwan semiconductor manufacturing just last week. So that should bolster the AI play, at least the risk-on sentiment surrounding AI names. Of course, we want more granularity when it comes to some of these individual companies, right? Like Alphabet, who's up this week. Tesla is also in the AI play with XAI. Beyond that, there's also tariff concerns, right? What their outlooks are. And for Tesla in particular, how they can withstand the rollback on the EV tax credits that Tesla's customers had enjoyed for years now.
Han Tan there in Dubai, chief market analyst at Nemo.money. Thank you very much for joining us.
Thanks for having me.